Dear investor, Nuvama Private, formerly Edelweiss Private Wealth, is pleased to present to you the latest issue of Investment Strategy Report for May 2023. Let's take a look at key highlights of April 2023. On the global front, major developed and developing economies witnessed a marginal drop in the inflation. The marginal relief in the persistent high levels of inflation could prompt the central banks across the globe to put a pause in hiking the interest rates further. Shock waves were felt in US as major lead indicators point at a sharp slowdown ahead. The elevated inflation levels resulted in deteriorating the US personal savings as a percentage of disposable personal income, which further led to reduced traction in the housing sector segment, which is one of the biggest contributors to US GDP. However, according to the IMF GDP projections, India is in a better position to navigate global spillovers in 2023 and 2024. On the India macro side, demand-side indicators remain anchored, depicting strength in the economy. April 2023 witnessed the highest monthly GST collection ever, and 2- and 3-wheeler segment sales also saw a sharp uptick in March 2023. Quite a few supply-side indicators were showing mixed signs of recovery. On one hand, services PMI rockets to 13-year high and labor force participation ratio at 3-year high. While on the other hand, growth rate in the output of 8 core industries dropped sharply. Equity view. After the overall Indian equity markets witnessed correction in financial year 23 amidst the market volatility, in April 2023, markets gained positive momentum leading to investor confidence. SIP flows in the equity markets crossed the 14,000 crore mark for the first time ever, and the secondary markets continue to receive flows from FII and DIIs. At the current market valuations, the quantitative model is signaling at underweight allocation to equities, primarily due to yield gap being skewed towards debt allocation. There was a marginal drop in global inflationary pressures. The Fed has hinted at a pause in interest rate hike cycle. Overall, global economy is stagnated, while the US economic indicators point at a slowdown. In India, economic activity saw some traction. The corporate earnings may face headwinds due to global slowdown. However, the participation of retail investors in Indian equity markets remained resilient. We continue with underweight stance on equities. In current scenario, it'll be prudent to be underweight on mid and small cap allocation as well. Fixed income view. Consumers felt some relief as inflation moderates from its elevated levels. CPI inflation is at its lowest level since December of 2021, and it moved back to below the RBI's upper tolerance limit of 6%. This was majorly due to a slowdown in food costs. WPI witnessed the lowest reading since October 2020 and is below the market forecast of 1.87%, primarily due to the base effect. 10-year yield curve saw a sharp drop as on 4th May 2023. In Feb and March 2023, we had highlighted the opportunity of allocation to duration strategy in a calibrated manner, which seemed to have panned out as expected till now. The easing inflation to sub-6% levels provides comfort that RBI may continue with the pause in rate hikes. The drop in the 10 years yields has helped for duration call to pan out as envisaged till now. Post the amendments in Finance Bill, the investors in debt mutual funds can no longer claim the indexation benefit for the investments done after 1st April 2023. Hence, instruments like direct bonds, NCD, MLD can also be considered in addition to mutual funds after comparing the post-tax yields which they would offer. Core allocation to high-quality yield-oriented papers is preferred. Investors can consider to lock in the yields as per their requirements with hold-to-maturity perspective. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.